Fibonacci retracements are probably one of the best-known concepts in classical technical analysis. They are basically tools that should not be missing from any reasonably professional trading software. Even though many professional traders, including us, have now largely turned away from technical analysis, it is a fact that many institutional trading algorithms use certain Fibonacci retracements as a basis for calculation. So it is not surprising that even today, the price sometimes reacts impressively strongly to these levels and the overall trend continues from them. However, in our experience, it is essential to combine Fibonacci retracements with other concepts in order to find and draw the really strong and high potential levels. Fibonacci, whose real name was Leonardo da Pisa, was an Italian mathematician born in Pisa in the 12th century. As part of his research, he discovered the so-called Fibonacci sequence, an infinite sequence of natural numbers that continues with the addition of the two previous numbers. This series of numbers occurs again and again in nature. Fibonacci was able to use it to describe the growth of a rabbit population, for example. The spiral of a snail shell can also be described exactly with a Fibonacci sequence. In trading, so-called Fibonacci retracements were used very early on by technical traders to describe the length of a possible pullback in an ongoing trend. So, we are dealing here with a pullback concept. A Fibonacci retracement is always drawn from the absolute low of an uptrend to its current high, or alternatively, from the absolute high of a downtrend to the current low. According to the classical Fibonacci theory, we expect pullback reactions of 38.2%, 50%, or 61.8% of the current trend movement. If the price closes beyond the 75% level, a trend movement is definitely considered to be over. We therefore look at these levels for institutional trading interest in the past by combining the Fibonacci prices with other concepts, thus finding high-quality locations where it can be assumed that the price will resume its movement in the overall trend direction with a high degree of probability after a pullback.